It's turbo power!
Hello everybody and welcome back to the channel, and this video, which is going to be the second today, doing an update on some of the hydrogen stocks. As some of you who are subscribed to the channel knows, we have done a top 4 where we benchmark these stocks based on a fundamental analysis, and then we have done individual videos on some of them which we would urge you to check out because we think they're quite interesting and gets a deeper insight into these companies. So hydrogen stocks have gotten a lot of love over the last couple of months, and today is by no means any different. They are basically on fire. As you can see, BLDP is the one that is gaining the least with around 14%, while as Plug Power is getting 29%, but across the board, massive growth in these stocks. And we were a bit skeptical when we did the analysis initially. We said, okay, these seems a little bit overpriced. And obviously that hasn't changed. We gotta admit, in the short term, we have been wrong. BLDP has gained 54%, Fuelcell is getting 550%, Plug 177, and 85% for BE. Hydrogen stocks have done a lot better on the share price than what we expected. As you can see, the difference that we have in the intrinsic value versus the price that we are having today is quite significantly. So again, we do recognize that we have been wrong, at least in the short term, but we still feel that we are seeing bubble tendencies, and we are going to explain really short in this video why we think this is the case, so stick on. So to do this in a simple manner, what we want to do first is to look at the hydrogen stocks revenue and how they have developed over the last 5 years. And please bear in mind that some of these companies are further ahead on their hydrogen transitioning than others. Bloom Energy, for example, are slowly moving towards that, while as Plug Power is a bit further ahead. However, if we look at the revenue growth since 2016 for Bloom Energy, we can see this has gone up from 209 million to 726 million. So quite a good compound annual growth rate. Then you have Plug Power here on the gray line, which has also seen quite relatively good growth over the years. And then you have BLDP and Fuelcell, which has stayed relatively stable over the last 5 years. Actually, a company like Fuelcell has actually decreased until 2019, where it saw a relatively high increase based on a small number. But as you can see, there's a huge difference between Bloom Energy, Plug Power, BLDP, and Fuelcell in the growth of revenue. As we said in the individual videos of these companies, we like Bloom Energy the most together with Plug Power. Fuelcell, we are a little bit more hesitant towards them because we do not really feel that they have the same, how can we say, they are a little bit more depending on future R&D in order to become successful, and we are not sure whether they're going to get there yet. At the same time, their management is not even sure whether they're going to get there. Basically, they were stating that we may not ever become profitable, and that is kind of like something that is turning us off a little bit. So to try to illustrate or benchmark these companies, we thought it would be interesting to take a valuation metric. So we have decided to take the price to sales ratio, which is basically a valuation ratio that compares the company's stock price relative to its revenue or revenue per share. So here you see the share price of each of the companies that we illustrated just before, and here you see the revenue per share for the last 12 months, which then gives you the price to sales ratio. So the price to sales ratio show how much investors are willing to pay per dollar of sales for the particular stock. So as you can see, Bloom Energy is only 5.7, while as Plug, Fuelcell, and Ballard Power is all the way up between 46 to 56. And again, for a growth company where we expect that the revenue will grow significantly over the coming years, we may be willing to pay more for a company like that. So Plug Power has demonstrated, at least in the last 5 years, that they have been able to grow their revenue decent on an annual basis, while as fuel cell and ballast power has not increased at all over the last 5 years. And again, is there any guarantee that this is going to increase significantly for them over the coming years? That's the question. Even so, if this is the case, the price to sales ratio of these three companies are still considerably high and much higher than what we would like. And we thought we would take a separate company to illustrate actually how much these numbers are, just to put it into perspective. And you sometimes need to be careful when you're benchmarking the price to sales ratio across industries. So you need to take this with a grain of salt, but we still think that this is something that can put it into perspective in a good way. So let's take a look at Tesla. And as everybody knows, Tesla's share price has also skyrocketed, and it's up at 802.66. And everybody knows that Tesla has gained 500, 600, 700%, how much it is, whatever it is today, over the last year. Their revenue per share for the last 12 months is 28.05, and their price to sales ratio is 28.6. A lot of people is talking about Tesla being a kind of like a bubble situation that is going to burst at a certain point. But imagine the growth that Tesla still have managed to deliver, the car sales that has increased over the years, the R&D that they're doing into new technologies, and they have demonstrated that they're able to do that, and still their price to sales ratio is only 28.6, while as some of the hydrogen companies, they have not been able to demonstrate that at all. And Tesla's price to sales ratio is at its highest point in the last 10 years. So again, it's just to try to put this into perspective, that you're paying a lot at the moment for some of these hydrogen companies. We're not saying Bloom Energy is cheap by any means, because they are doing the transitioning, as we mentioned, into hydrogen. So just to put that aside. But for the others, you're paying a lot for something that you're not guaranteed you're going to get. And we are a bit concerned that this is a potential bubble for the hydrogen that is going to burst again, and they're going to fall like a hammer. So again, we just wanted to do this video to say, be cautious out there, be mindful about this, make sure you do your due diligence, because a lot of stuff is increasing now. The whole market is basically on doping right now and being pumped up, and at some point it has to go down. And we think that some of these stocks that has still not demonstrated that they're able to actually grow something like their revenue, they will be hit the hardest. It's the quality companies that are going to suffer the least. So you really need to be mindful about that. This doesn't mean that this increase in the share prices cannot continue, as we have said previously, but we will definitely stay away from these companies as of today, simply because it's completely outrageous what you're paying compared to what you're getting. For the second time today, this was all we had for today. We really hope you enjoyed this video. Please subscribe for future content. Please give us a like, it really helps with the algorithm. And please subscribe for future content. Please keep in mind that we are not professional financial advisors, and this is only done for entertainment purposes. There's not much more to say than stay safe, have a nice day. Hasta la vista, baby.